OpenAI just broke its own API adoption record with GPT 5.5. Codex revenue doubled in the first 7 days. NVIDIA confirmed its China market share has collapsed to zero, but somehow raised guidance to $78 billion. And Google DeepMind workers just voted to form the world's first union at a frontier AI lab, triggered by a Pentagon deal to put Gemini inside classified military networks. Palantir called its own results the best of any software company in history. And the Musk trial has Elon ranking his competitors from the witness stand. 5 stories that are anything but yesterday's news. Let's get into it. OpenAI just reported the fastest API adoption in the company's history, and the numbers are worth stopping on. GPT 5.5 is now the backbone of the commercial AI economy. Enterprise deployments are accelerating, Codex is monetizing, and OpenAI is showing that model improvements translate directly into revenue, not just benchmark scores. GPT 5.5 launched on May 5th with a critical capability improvement: 52.5% fewer hallucinations on high-stakes prompts versus its predecessor. Codex API revenue doubled within the first 7 days, faster than any previous model launch in OpenAI's history. GPT 5.5 Instant simultaneously replaced GPT 5.3 as the default ChatGPT model and was trained at the Stargate facility in Abilene, Texas, running on NVIDIA GB200 hardware. The model is also live on Amazon Bedrock, deepening the AWS partnership. Starting today, May 6th, Workspace Agents, the Codex-powered coding agents, transition from free preview to credit-based pricing, integrating directly with Slack and Salesforce. For Microsoft, which holds significant OpenAI equity, Codex doubling revenue in 7 days is a direct tailwind to Azure OpenAI service and Copilot revenue. For Amazon, Bedrock integration means AWS captures a cut of every GPT-5 Enterprise API call routed through the cloud. Watch for Enterprise Workspace agent conversion rates. That's where OpenAI's recurring revenue story will be written or broken. Palantir CEO Alex Karp said something on the earnings call that stopped analysts cold. These results, he told investors, dwarf the performance of essentially every software company in history at this scale. That's not typical CEO language, and the numbers back it up. Palantir reported Q1 2026 revenue of $1.63 billion, up 85% year-over-year. U.S. revenue surged 104% to $1.28 billion. Commercial revenue jumped 133%, a number that reflects genuine enterprise product market fit at scale. Government revenue rose 84%, powered by defense AI deployments. Full year 2026 guidance was raised to up to $7.66 billion, implying 71% annual growth. The defense side constraint is real. Karp explicitly told investors that Palantir always prioritizes U.S. warfighters over commercial clients when capacity is tight. And right now, both queues are backed up. For investors in PLTSH, this earnings report marks an inflection point. Palantir is no longer trading on potential. It is executing at a pace that most enterprise software companies can't approach. The question now is whether the valuation, which has already moved substantially, still leaves room for compounding. Watch for any capacity expansion announcements and new defense contract disclosures in Q2. Those are the next catalysts. NVIDIA just confirmed what investors feared, and then delivered numbers that made the fear irrelevant. Jensen Huang confirmed on the record that NVIDIA's share of China's data center computing market has dropped from over 90% to essentially zero, following U.S. export restrictions and Chinese government countermeasures. That's the headline risk. Here's the other number. NVIDIA projected $78 billion in Q1 revenue, a 77% year-over-year increase, powered entirely by demand outside China. At the Milken Institute, Huang reframed the narrative, arguing that AI will reindustrialize America and create net new jobs. He also teased a mystery next-generation chip that will surprise the world and promoted the open-source Ising quantum AI model. The investor takeaway is clear. China is no longer the growth story for NVIDIA. The US, Europe, and allied hyperscalers are. Amazon's Rubin orders, Microsoft's $190 billion capex commitment, and Google's infrastructure build-out now represent the entire demand equation. The China loss crystallizes this permanently. Watch whether AMD attempts to fill any portion of the China data center gap. That would be the only credible near-term competitive threat to NVIDIA's non-China dominance. Elon Musk just ranked the world's AI companies from a federal witness stand, and his order reveals more about competitive positioning than anything he would say in a public forum. During week 2 of the Musk versus Altman trial, Musk testified that xAI used distillation techniques on OpenAI models to train Grok, framing it as industry standard practice. He also warned from the stand that AI could destroy humanity and accused Sam Altman and Greg Brockman of engineering his original OpenAI investment through deliberate deception. Then came the ranking. Musk listed Anthropic as the #1 AI lab, OpenAI #2, Google #3, and Chinese open source models #4. That sequence tells investors something important. It means Musk himself rates Claude above GPT and Gemini on technical merit. OpenAI co-founder Greg Brockman disclosed a stake worth approximately $30 billion during testimony. And in a significant forward-looking signal, xAI IPO plans remain on track for as early as June at a $1.75 trillion valuation via SpaceX. For investors watching the AI competitive landscape, a $1.75 trillion xAI valuation would rival OpenAI's current implied cap and create a new public market benchmark for AI company worth. Watch for xAI's IPO prospectus filing. It will reveal Grok's actual revenue, user counts, and capital structure for the first time. The world's first union vote at a frontier AI lab just happened, and it was triggered by a weapons deal. UK-based Google DeepMind workers voted to form a union, citing internal backlash over a Google contract, giving the US Department of Defense access to Gemini models inside classified military networks for, quote, any lawful purpose. Critics inside DeepMind argue those 3 words could authorize autonomous weapon systems and mass surveillance with few enforceable constraints, a red line the company explicitly crossed when it shut down Project Maven in 2018. Now, 8 years later, Google is back in defense AI at the frontier level. The irony is acute. Gemini's global AI traffic share has surged from 6% to 25% in just 12 months, cementing Google's position in the foundation model race. But labor unrest at the company building those models creates execution risk at exactly the wrong moment. Google I/O is on May 19th, widely expected to feature Gemini 4 and Veo 4 announcements, events that could be overshadowed by ongoing labor and ethics coverage if the union story gains momentum. For Google investors, this is a new variable in the risk equation. Reputational and ESG-related pressure on a defense AI contract that is simultaneously a strategic asset. Watch the May 19th Google I/O announcements. Gemini 4 performance benchmarks are the catalyst most likely to move the stock near term. Today's theme is execution at scale and the friction that comes with it. OpenAI is breaking adoption records. Palantir is running out of capacity. NVIDIA is rebuilding without China. And Google is navigating the AI defense dilemma that will define every major tech company this decade. The stakes are clear, and the capital is committed. If today's briefing added signal to your thinking, Subscribe to the Daily Alpha and follow us at @the Daily Alpha. We publish every trading day. This is the Daily Alpha.